All right, here we go. So good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome to Trading Coach's Playbook. My name is Brandon Waddell, Chartered Market Technician, and I'm just going to go ahead and jump right into it. Actually, before I get started, I need to give out a little notification that we are not registered broker-dealers or investment advisors. I'm going to take a look at a lot of different securities, but I'm doing it from an educational standpoint only. I'm not telling you to actually buy, sell, or hold any particular securities. And there's nothing tailored towards any particular individual. Also, there's always risk involved in the markets. It doesn't matter what you try to do. You can never eliminate it. You can always try to manage and minimize the risk. That's what we'll do. And Freedom Management Partners personnel are not subject to trading restrictions. I and others at Freedom Management Partners could have a position in a security or initiate one at any time. So that being said, let's see. Not sure why my camera doesn't seem to be working. Thought I had it turned on, but oh well, we'll figure it out. Split B cam, there it goes. Yeah. Oh well, as long as you see my screen, that's the most important part. You don't need to see me unless you have to, but we do have a lot of things going on as far as workshops and free online workshops. Join us every Monday from noon to 1 Eastern as Rob goes through the power hour and actually talks a lot about what's going on in the markets and a couple of opportunities that we have to share ideas with you in those markets. And let me see, I just closed that out. So let me try this again. Stop video. And yeah, it's not a critical thing, so I'm not going to worry about it too much. But anyway, one of the other things I'm going to talk about quite a bit is the E-mini think tank. As you see in the bottom right-hand corner, I'm actually the lead instructor for the E-mini think tank. And on Monday, Wednesday, and Thursdays, we get together from 9 a.m. to 11 a.m. Eastern. And we talk futures. We look at opportunities in the markets and we digest or dissect really what's going on in the markets, try to figure out what we can do to affect high quality opportunities in those markets. So good morning, Brendan, and good morning, Stephen. See the chat going on there as well. And anyway, I think that's about all I got as far as slides go. As you can see, the E-mini think tank, if you're interested in joining us, there's a link there that Clarice is putting out. And the way it works is I have a bunch of recorded videos already. There are bonus videos, and these are to help you understand some of the strategies that I teach in the class, as well as these videos. And you'll see one of them is actually scalping and volume trading, which we're going to talk about today. But in addition to the videos, there's documentation that supports all that. So if you go out to fundamentals, you'll see some of the documentation there, as well as other strategies. And again, you can see there's different strategies that I've gone over and taught throughout the years. So the nice thing is that what happens during every session on those live sessions I mentioned, if I go out to, let's see here, trade ideas. On Monday, Wednesday, and Thursdays, we actually get together online using Zoom. And what I do is before the class begins, I present several trade ideas that I'm looking at to the students. And then I go through those ideas and show you why we're looking at those ideas based on the techniques that I've taught in the videos you see in the class. So if you're interested in learning how to trade futures and want to do it consistently, yeah, you can go out and get some video information. Even from me, you get the video information that you made a think tank, but you don't become an expert unless you're practicing the right way over a period of time. So just getting the information is the first part, learning the strategies, but being able to have an interaction with a mentor really, really helps. And, like I said, if I'm there, I'll just show you some of these trade ideas. There we are. This was from yesterday, as a matter of fact. Soy meal, the Russell, corn, and the lean hogs there. I go over these trade ideas. So I'm employing all those strategies. You get to see it in real time, and that makes you better at being able to actually use these ideas in your own personal trading. So let me see, I need to go out and change my charts here for a moment because I was looking at spreads. So I do a spread course as well, but we're going to talk about the E-mini think tank. So I'll change my charts over to the think tank. That way we can take a look to see how some of those trades might be doing. But overall, we do track everything I do. Oops, wrong page. You can see that going back, we had this one that hit our target before entry, hit our trail stop on nat gas, so we made money on that one, and these ones never got in. And if I go back further in time, you'll see some get entered, some of them do not. But these are trade ideas that I put out over and over and over again, and I track everything I do. So if I go to my spreadsheet here, this was January's information. Every single trade, as I mentioned, is tracked. Oops, there we go. And you can see the results. You know, we had 44 trades that were identified but never hit entry. And that happens, you know, you do a lot of planning, but unless prices actually get to your entry point, you don't take the trade. We had 20 winners, only 4 losers. Pretty good ratio there. We had a pretty good month. As you can see, out of all the trades I picked, I was right about 30% of the time. We could zoom in on that area as well and take a look at that data. And this is done in a hypothetical account. It's not done with live money because, you know, we're just practicing. You can always take trades, obviously, once you feel comfortable with the strategies. But I recommend they start off in a simulated account first, just practice. And you can see the rate of return has been pretty positive. And one of the key things I'm very proud of, and I do this in all of my trading, even when it comes down to scalping, is I try to maintain a very small risk compared to the reward I potentially could gain. So here it's a little less than 3 to 1, which, you know, I want to maintain a minimum of 3 to 1 reward to risk ratio. And when I do that, I can actually usually do pretty well in my trading, even if I'm not a winner overall. Like I can have a negative win-loss ratio, but still be positive as long as my ratio of wins to losses, the size is much different, where I'm getting big wins and small losses. I'm trying to remember, I think it was, you open up, let's see here, go to, let's see, mini think tank, December 2020. I think this is the one. Nope, that wasn't it. Oh, well, I'm not going to find it right off the bat, but there was one that I did where I was actually negative for the month and came out positive overall because, again, small losses, much bigger winners. So anyway, getting back to these charts, you know, if I were to look and see what's been going on in these trades, as I mentioned on yesterday, we were looking at corn. Unfortunately, corn hit the entry just before the session began for us. And that happens, you know, sometimes you get the trade, sometimes you do not. So you can see what happened right here. Just before class began, I was looking at my trade ideas, and there it is, 8:30 in the morning. Class begins at 9, and I'm on a 5-minute chart. So unfortunately, it came into the zone right there, and it shut down. Then when we reopened at, actually, this was 8:45. That was before the shutdown period. So right there, you can see we hit the zone, never hit my stop, and rallied all the way to target number 1. And I believe, yep, target number 2 was pegged as well. So that one just missed. We take a look at the soy meal. This one, unfortunately, looks like it might have been stopped out for a loss. And that happens. You know, not every trade is a winner. It came down to the entry point right here, as you can see right there. And it started off working really, really well. We hit the entry spot, started to bounce. Unfortunately, it turned around and went against me. So now I get to label that one as a loser. And again, that's the way it goes. Sometimes you make money, sometimes you do not. But the nice thing is the losers are much smaller than the winners. So overall, we don't have to be right all the time. We just can't lose a lot. So I'll keep track of that for, that's not hot stop loss. That should be hit stop loss. Okay. So I'm working on getting them out to the students before the 9 o'clock class. It's before 9:30. So the ideas usually are presented at the beginning of the class. Yeah. So you have to wait until 9 a.m. to see everything, unfortunately. But I'm working on something that I'll be able to present it a little bit earlier. Looking at the hogs, let's see. That one never came back down to the demand zone, as you can see. This is on a 60-minute chart. Yeah. So we just had a really bullish play. I was expecting a bit of a pullback, but it just hasn't come back to our entry yet. So that one's still pending. And the Russell 2000 was the other one. This is at 2063. It looks like it just hit, but it might not have worked. Oh, sorry, I got to go back to the right day here. 10th. There we are. And on the 10th, the entry was supposed to be on a 15-minute time frame. So let me change the chart. There we are on a 15-minute time frame. And we did not get into this one. For some reason, it's not really showing me the zone. RTYH22. I'm not sure what happened here. But when we came down in the area, we had too much bearish momentum. So this one did not enter. So I'll put that in as no entry. And the RSI was less than 40 when that hit. So that's why it didn't work. Daniel, you don't have to raise your hand. If you got a question, you just go ahead and ask if you like. Anyway, that's just kind of a little heads up as to what we're doing when it comes to looking at some of the opportunities in the markets. And we do this, like I said, every single session we get together. So you're seeing how we apply this live in the markets. Now, getting back to my charts, and I can leave with the Russell. It doesn't really matter which security we look at, honestly. I'm going to go and clear my charts up. I said I want to start looking a little bit at scalping. Okay. The yellow shading, I like it. I just like the way it looks. There's no reason why I have the yellow shading versus white backgrounds. I think the white's a little too harsh to look at all day. So I like the yellow shading, that's all. Yeah, I forgot how I did it, but I just, bright white charts get a little bit tiresome when you're looking at them all day long. And if I go to dark charts, then it's hard to see when I'm teaching. So that's why I tended to use this kind of yellowish orange shading. Plus orange is my favorite color. So that's it. Yeah, dark doesn't show up well. And again, I got to be careful. I'm very big on psychology when it comes to trading, especially. And I do things to help me with my mindset. So if you use really, really bright charts, again, you're going to cause yourself some headaches, and it's hard to look at the screen all day. And not that I'm in front of the computer all day, but the time I do spend, I want to be comfortable. So I do little things like I raise my monitors up so that way my head is tilted upwards instead of down or even level. That way, a positive person keeps their chin up and they're looking a little higher. So it keeps you more alert and ready to trade. So other things like I keep my home office on the north side. So that way I've got natural light, but it's not heating me up and making me tired because I don't have direct sun. So all these little things I think about. Yeah. So yes, in the E-mini think tank, we actually trade futures. So that's what we focus on for the most part. If you're looking at, there's science that backs it up. Absolutely. So if you're looking for options, we have other programs at Wealth Builders HQ, like power option plays and other things that Rob does. You can learn more about that by attending some of his workshops. But primarily, I'm a futures trader, and that's what I've been doing for about 20 plus years. So that's what I focus on. And scalping can be done really on any security, not as much on options, but it can be done on any security. And I said we're going to talk a little bit about that today as far as what is scalping and how do we do it. Oops, the wrong button there. Yeah, I'm not sure if my camera is working or not, but it doesn't really matter if it isn't. There we go. So how does someone, great question. Daniel's asking, how does someone who's new to E-mini Think Tank get up to speed to what we're trading? Well, that's why we have the videos. And one of the things I'm compiling that I'm hopefully going to get out by next week is there will be a document here as to which order should you watch these videos in. So for the best thing is you got to figure out exactly what is it you're looking at on the charts and how do you read the charts the way I read them. And there's some basic stuff like trading routine and finding zones or targeting, how to find the right targets, things like that. So yeah, I'm going to be putting in a kind of a what is in here and what order should you get into to catch up, get up to speed. Every class is recorded as well, so you can always watch some of the old recordings to see how the pace is and what we look at. And of course, all the documents that are there as well. So yeah, I want to make it as accessible to everyone. If you've never traded futures before, well, this might be a little difficult, but I have a futures boot camp that can help you out. You can always message us at support@wealthbuildershq.com. And thank you, Will. Will said it's a great course. But yeah, if you got more questions, support@wealthbuildershq.com, and they'll be able to answer some more questions for you as well. But anyway, getting back to scalping, basically what you are trying to do is profit from short-term moves in the markets. So for instance, when we take a look at charts, there's several different ways of doing this. And it really comes down to your chart itself. And I'm not going to get too much into risk management because we've talked about this in previous videos, but I did say before, when it comes to risk management, there's three things you could do to manage your risk. Number one is size, and that would be the type and number of securities you're trading. Now I said type in number of securities because it could be shares, it could be lots, it could be futures, it could be anything like that. Okay. Let's see, the steps in define and trade futures a bit much. Oh, it shouldn't be. It's just practice, honestly. But yeah, we could talk a little bit more about that. Darla was saying, I love the way you put in the orders for the trade setups, but I find the steps to find and trade futures a bit much. Yeah, there's things we could do to make it simpler. Absolutely. Anyway, continuing on with this thought, the next one is going to be frequency, which is the number of trades taken. And basically what you're looking at there is being selective. And, you know, when we're talking about number, type and number of securities, if we're talking about futures, we're basically looking at standard, E-mini, and E-micro, right? There's different ones that you can take, and a certain number of contracts, obviously, you can trade as well. When you want to be as selective as possible. If you start to take every single trade that comes around, you're going to be taking bad trades as well as good trades. So we want to be selective to a certain extent to make sure we're only taking the right opportunities when it comes to our trading, rather than just everything that comes along. And then lastly, and this is where we're going to get into right now, is duration. That's the length of holding the trade. The longer you are in a position, the more it can go for or against you. So when you increase size, frequency, and or duration, you're always increasing risk. If you dial them back, you're reducing the risk. So when we're talking about scalping, we're just looking at small duration of trades. Now, there's not a set definition when it comes to scalping. Sometimes it could be a few minutes, sometimes it could be a few seconds. You know, somebody could say that intraday trading is scalping. And if you hold on for a few hours, you're scalping. It's just it's a personal definition, but kind of accepted, and the accepted definition would be in and out within minutes. And again, it could be as small as a few seconds when it comes to scalping. Now, when it comes to scalping, one of the things we have to do is choose the right tools. And when it comes to our charts, we can choose different types of charts to trade with. So when we're dealing with the different types of charts for scalping, you're usually dealing with minutes. And I mean, when I say minutes, we're doing what are called time-based. Okay. Oops, hang on just one second. Bear with me. All right. So we are dealing with charts that are based on maybe 1 minute or 2 minute, maybe 3 minute. So we're dealing with candlestick charts that last, or the period is only 1, 2, or 3 minutes. Okay. So the other thing that we can do is something called tick charts. And these charts are not based on time. Instead of being based on time, they're based on number of trades that happen. A tick in this vernacular is actually a trade. So these charts are based on the number of charts executed. Okay. So if you say that you're going to be doing a let's say 500 tick chart, you basically get a new candle when 500 executed trades go through. That's it. So it's all done based on the number of trades going through. And it depends on the platform you have, whether you can do this kind of charting or not. Many platforms do it. Some charts do, or some platforms do not. Now, the other kind, or, actually I should have a B here for every A, but it doesn't really matter. It's my notes. The other one is called share bar or volume charts. Now, I prefer the share bar charts over the tick charts, and I'll explain why in a little bit. Actually, I'll explain now, because really what we're looking for when it comes to trading is the imbalances between buying and selling pressure. Okay, I want to enter where I see there's an imbalance and we're likely to see prices turn around. Okay, great question, Paul, saying for tick charts, it's a matter whether the trades are winners or losers. You won't know. You have no idea whether the winners or losers. No, it's just executions that happen on the chart. So if you were looking at time and sales, every time there's a new time and sales where a buyer and seller came together, that would show up on your chart, and that's considered to be a tick. You don't know if that buyer's winning or that buyer's losing, or the seller's winning or seller's losing. So nobody knows. It could be an entry, it could be an exit, right? It doesn't matter. It's just a transaction has occurred, period. Now, when it comes to share or volume charts, we're looking at the volume, not the number of trades. So for instance, if in this case, we're looking at, let's say, a 500 share or volume chart, and we're dealing with futures, you get a new candle every time 500 contracts are traded. And that could be one trade, 15 trades, or even 500 trades of one contract each. Doesn't matter. It's just based on the volume. So as soon as there are 500 contracts traded, there's a new candle that's created after the first one there. So that's how that works, where you're getting the volume pushing things forward. Okay, so that's the three different types of charts that you can have. If I go out to my charts right now, I'm looking at a 15-minute chart on the Russell 2000. That means, well, first of all, when you look at the bottom of the chart, you can see everything's pretty symmetrical when it comes to time. So you've got 9, 10, 11, 12, everything's separated by 1 hour. If I zoom in a little more, it doesn't really give me any difference here. You see. Nope, that's all it does. And if I were to go to a 5-minute chart, obviously now, I hit the wrong button, sorry. There you go, 5-minute chart. Now each candle is 5 minutes of time. But if I change this to a custom, now I can go to, and you even see, let me zoom in a little bit here. You can see it says trades, ticks, or intraday volume. There's also breakout range charts, which I'm not a really big fan of. I don't use them too often, but I do know some people do like to use those too, and you can use them for scalping just as easily. But a trade or tick chart, once more, that's based on the number of trades. And right here is trades per bar. Well, let's say we do 500. On the Russell, I'm not sure what that'll look like. So let's zoom back out and we'll see. As soon as it loads up, it may be kind of a longer time frame. I'm not sure. For some reason, I'm not getting intraday activity here on this chart. So let me change securities. I have some issues with the data feed on the Russell sometimes. So I'll go to the S&P futures. It's more heavily traded anyway. And it's loading up. There we go. So now we have a 500 tick chart. And you can even see at the top, it says 500 trades right up there. So every time we get a new candle, it's after there are 500 transactions that have occurred. It doesn't matter if each transaction is one contract or 50 contracts. As long as there's 500 transactions. What you'll notice at the bottom is that the time is no longer symmetrical. Although, right there, that's 4 minutes. Then they had 6 minutes. Now 7 minutes actually. So we got 4 minutes here, 7 minutes here, 6 minutes there, 7 minutes there, 8 minutes there. So it doesn't really matter. Okay. You just close an oil trade scalp. Very nice, Jason. Okay. Oh, I'm sorry. Yeah, the notes right there. There you go, Barry. So I was saying basically it could be one trade is 15, let's just say one trade could be 15, or one candle could be 15 trades. I said that wrong. So let me clean that. That way you can take the right notes. One candle. Fix that. Could be one candle equals 15 trades, or even 500 trades of one candle each, or one contract each. There you go. Okay, is that right? Yeah, every time new contracts. It wouldn't be one candle anyway. Said that wrong. Sorry. We're on a volume chart there. So it could be one trade. That was right the first time, wasn't it? One trade. $15 trades or 500 trades of one each. Yeah, that was right the first time. Sorry. Got confused there a little bit. Oops. Should be 20. There you go. So that's the right note. So if you want to take a picture of that with the notes, go for it. Okay. So again, scalping is just a different perspective that you get on price. That's all it really is. So we just look at it as a much smaller time frame rather than a big time frame. Okay. Oops. There we go. Oh, you're welcome. All right, so here we are again looking at a 500 trade chart. Now, the funny thing is nothing changes. When I go back to E-mini Think Tank, as I mentioned before, whoops, going too many things here. On my E-mini Think Tank, the way I find my zones, I click on bonus videos, and I got the documents for it too, right here, finding a trading routine and finding zones. Nothing changes. I still use the exact same tools. So when I go back to this 500 tick chart, I'm going to start at my current price, look back and up to find my levels of supply, and I'm going to look down and left to find my areas of demand, so I know where to get in and out. The difference is going to be that typically when you're dealing with time-based charts, your zones are going to be bigger and further apart. That means two things. One, if they're bigger zones, you have more risk because I tend to buy or sell on one side of the zone and then place my stop on the opposite side. And if the zones are further apart, that means my profits will be larger because I'm holding on for a longer period of time as well. However, with the tick or share charts, I'm going to have smaller zones, so less risk, and they're going to be closer together, so less reward. You can never have more reward unless you're willing to take on more risk. It just doesn't work that way. So this was not a great zone, but it is holding right now. And you can see that we have really, this is my leg-in candle, drop, base, drop. The reason why I would say this is not a great zone is technically I go wick to wick when there's only one base and candle, but this is not a good leg out because it didn't clear the previous candle's low. The low there, 84.50. The close here is also 84.50. So the fact that that didn't close below the previous candle's low disqualifies this area as a zone. Now it's working, but personally, I would not be trading this. So what I would be doing right now, if I'm looking for a scalp opportunity, is I would start off, again, starting current price, put in a horizontal line, and just follow my technique for finding zones. I'm looking for a big move down or lots of red candles. There's a bunch of red candles here. So I find my, let's see, leg. That's a leg candle. This one is a base candle. And then I've got a leg candle. So there's actually a zone right here where price rallied, based, and dropped. And once again, if you don't know what I'm looking for, well, actually, I'm sorry, this is not quite right because that's my leg-in candle. That candle also closed inside. But again, if you want to know what my zones look like and how I'm finding them, if you join the E-mini think tank using the link that will be provided for you here in the chat, you'll be able to follow me and see exactly how I find my zones. And this zone does not qualify. So let's see. I thought the link was up there just a while ago. If you can put that up there again, Clarice, appreciate it. I think I can put it up too. Let me check. Nope, it won't let me. There we go. Thank you. So this doesn't qualify either because we have a leg in, we have a base, but we don't have a clean leg out. And you can see that I said that the lower zone didn't work. And sure enough, there we are pushing through it, right? So even if I tried to go short on the other zone, it didn't meet my criteria. And while we're still not breaking it, we will probably. So if I'm looking for a short opportunity, I still haven't found my entry. Now, if I'm looking to go long, same thing. I got to go back and find my area of demand, and I don't really see a good one right now. So I would just have to be patient until we get to an area. Say the zone did qualify. Would I want price to retest to enter? Yes, absolutely. And the zones work the same no matter what it is you're trading. Absolutely. So if I go, let me see if I have it open. Go to browser here for a moment and bring up Trading View. Here we are. Can't remember if I can do it on this one. Forget what kind of charts I have available here. But let's say I go to Apple as a stock. And we go into, yeah, I've got ranges, but I don't think I have, and we got minutes, which again, I could scalp with a minute chart the same way I would on anything else. I'm just looking for smaller range zones. And right here, we have a zone, rally, base, and drop. Oops. Come on. And there it was. So that was the zone. Yeah, again, you have, let's get rid of this. Rally, base. There's your drop with follow through. And then the target, let's see where the nearest area of demand is. Oh, beautiful right there. But I had to go to a 1 minute chart rather than going to a tick or share bar chart. It's not the best demand zone, but it's not bad. So again, right here, coming into the zone, it depends whether your stop is. You might not have been stopped out. And unfortunately, there was a new zone that formed right here, so it ended up stalling at that area. And it only gave you about a 2-to-1 reward to risk. So the main thing is you got to realize when you're trading these, you've got to be fast. You got to be able to analyze price very, very quickly and make a decision and be ready with that to defend that decision. So continuing back, like I said, if I'm looking for the S&P and my supply, keep going back here, and I might have a supply zone there. I'm just looking above my horizontal line, and I see this is a zone. Let's verify. We have leg in, base, leg out, new low. That's my zone right there, 4,500 and 3/4 to 4,502 and 1/4. For my demand zone, I just have to do the same thing, but look down. So we start at current price, left and back. And today just might not be the greatest day for scalping, at least not on this security. There's other securities I can trade. Okay. So I just keep going back in time until I find, until I find a good zone. And there it is. So we have drop, base, 4 basic candles there. Come on. Let's delete it. Start fresh. Anyway, right there is my zone. You can see a good buying pressure out of that area. So now when I go back to current price and bring this all together, what's going on there? We don't have anything anywhere nearby right now, so I would be sitting on my hands or looking for something else for a trade. Yeah, this one is looking okay. But again, okay is not high quality. I want high quality. So it doesn't mean that there isn't a trade there. Absolutely. Long wicks really increase your risk. They really do. So let's try a volume-based chart instead. Again, I can go to the custom charts. Okay. Do I look at the premium when trading the E-mini? What do you mean? The premium compared to the underlying security? Not always, no. Because the program traders are going to fix that right away if it goes out of whack. If you're not familiar with what was being asked, there's something called fair value that's attached to all futures. So if you go to something like indexarb.com, you can see right here, today's fair value for the S&P is negative 710. What that means is all day long, the index and the future should be related where the futures are traded below the index by 7.1 points because of the fair value for these securities. Fair value is calculated. Let me show you right here, fair value decomposition. This, by the way, is a website called IndexArb, if you're curious, www.indexarb.com. Now, that's also another scalping opportunity because what should happen is all day long, by the way this is calculated is it's interest that can be earned on the interest until the expiration minus any dividends you're not receiving because you don't buy the stock. Think about this. If you were to go out and try to buy the index, you can't really buy it. It's an index. But what you could buy are all 500 stocks that make up the index in the same weighting as the index. That would cost you millions of dollars, though, to do it. Or you could buy the futures. Same thing. You're owning all 500 stocks in a way. And what happens is the people who are not buying the stock and buying the futures don't have to spend as much money because you're trading on margin. So to make them equal in value, because otherwise nobody would ever trade stocks if they could always trade the futures cheaper, they subtract or add fair value to make them somewhat equal in value to each other. So that's hypothetically the purpose for it. So it makes it somewhat equal because the futures are trading below the value of the stocks. If you own the stocks, you get dividends, but if you buy the futures, you can buy it for less because you don't have to spend all the money. You get to trade on margin. I know it's a little confusing, but that's it. And basically what you're dealing with is you get the interest if you own the futures, but you don't get the dividends. So subtracting dividends from the interest payments, and that's how they derive the fair value. It gets done at the end of the day. I have not done this for spread trades, no, because you can't trade the spread of the index versus the underlying the futures. But what you can do is use it for an opening trade opportunity if there's an opening gap in the mornings, because it'll tell you where the gaps are going to close. The other thing you could possibly do is if I go to, let's see if I have it open, TradeStation. I know what this, oops, not that. There. I know what the symbol is on TradeStation. You can actually chart this premium. And what should happen, and you'll see it if I go here to the homepage. Let's say, for instance, when we open up first thing in the morning at 9:30, instead of the futures being down below the index at 7:10, remember the index shuts down from the evening until the next morning. The futures trade all night long. So if they're out of whack, let's say they're too far apart, what'll happen is program traders will bring them back together. So program traders explains it right here. Buy or sell programs, they will buy the stocks and sell the futures. And you can chart that separation between the two. So let's see. And trade it. Actually, I'm not sure if it's tradable itself, but it'll give you an idea if there's a scalp opportunity. So let's say the futures are too low and there's going to be a sell program where they sell the stocks and buy the futures. You could scalp that rally until they get it back in line. So there are things you could do with this, but not for spreads. No, that'd be something completely different. So anyway, getting back to my explanation of the trades here, I've now switched to a volume chart. Okay. On what time frame would you determine trend for tick charts? It's not time frame, it's multiplication of the whatever you've chosen for the ticks. So the same rules apply when I'm looking at futures, or sorry, when I'm looking at these types of charts versus time-based charts. Nothing's changed. So what's going to happen is when I trade, and that's a great question, by the way. When I trade, I'm always looking at multiple time frames. The reason why I use a higher time frame, I call it my perspective time frame, and that is to let me know where trends are likely to end or reverse. Then I'm looking at my intermediate time frame, which I actually call my trend time frame, and that's telling me the direction of the trend and the trade direction. This direction to trade. Okay. Then I have my lower time frame, which I actually call the zone time frame, because that's what it is. And that's, you know, where I find zones for entries and exits. And I kind of follow Dr. Alexander Elder. Years ago, he wrote a book called Trading for a Living. Okay. Can you hold on for one moment? Be right back. See, stop. Sorry. Anyway, okay. Yeah, Dr. Elder is brilliant, ahead of his time. Yeah. He did this back in 1985. He started doing this. But what he did was he basically said time frames are related by a factor of 5. Not a factor, but a factor. There we go. By a factor of 5. And they really are. That's what I believe. So I try to use multiples of 4, 5, or 6. And the reason why is because you typically want to stick with common time frames, not necessarily, oh, yeah, I can say what it is. PTF is perspective time frame, while T is trend. It's not trend, thank you. And then the last one is zones time frame. Okay. So, you know, the same thing would apply here. So if you go to, you know, you find your zone time frame that you want to trade on, and let's say as an example, I'm going to use 500 ticks, or let's say 500 shares. Okay. Then what I would do is multiply by either 4, 5, or 6, and preferred would be 5, obviously, right? And that'll give me my trend time frame that I should be using. So in the case of this trend time frame, I might be using 2,500 shares, and that's the trend I'm going to trade on. And then again, I'm going to take that time frame and multiply by either 4, 5, or 6, right? And that'll give me my perspective time frame. That'll tell me where that trend is likely to end. So in this case, I might be looking at, what is that, 10,000, so 12,500 shares. You could probably go down to 10,000 if you really wanted to, but yeah, that would be it. That would be my perspective time frame. So that's it. I'm just using multiples of 4, 5, or 6 to let me know what my bigger picture should be. So if I'm looking to trade on the zone time frame of 500 shares, and it would be the same for ticks too, by the way. So here I am on a 500 volume bar chart. First thing I'd be doing is looking for my zones, right? And this one actually did qualify as a zone. If we go back just a little bit in time here, you'll see I had rally with that green candle, 3 basing candles. So right there, leg in, base, 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 drop, new low, new low, new low, broke out of a prior low. That was a great opportunity, right? And we got 84 to 87. We'll call that 2.25 points of risk. Well, you got a little more because you got to put your stop above. And then my target would be my first level of demand as we go back. This one was already tested right here. So we're going to go back further. And let's see where our first target's going to be. Might still be this. Now, we did kind of touch the wicks here, but there's still a lot of buying pressure left in this area. So I'm going to call it there for our target. So I've got my, let's see here. I've got my supply zone. Oh, sorry, there it is. I've got my supply zone and I've got my demand zone. And if we're in a downtrend, then I'm clear to go short. So here we are on a 500 volume. Let's try 2,500. Oh, that didn't work. 2,500 volume. See if I get that. And on the 2,500 volume right here, what trend are we in? Well, we have a high, low. Oh, that's a lower low, lower high. We're probably moving down. The RSI can also help me a little bit. We see on our current rally up here, we failed to get above 60, which tells me there's some bearishness in price. So we're technically sideways. We're not in a downtrend yet, but we've made a lower high. We're likely to make a lower low. So the trend is in my favor if I'm trying to short. That means when I go back to my 500 volume, I should be okay to go short there. Does that make sense? Also, actually, before I go to the 500, if we're going to be in a downtrend, we should also check that 12,500 volume, the bigger picture, to let us know where we'll stop going down. So here we are, and you can see on this bigger picture, what trend are we in? We're down, right? So since we're in a downtrend on the big picture and sideways on the intermediate, we're probably more bearish biased, and we've got a supply zone we were coming to. Now, this will keep going down until we reach fresh demand, and I don't see it. This was a little bit of demand. It has already been used, and we're not really reversing here. So we're likely to keep going down for a while until we find demand, and I'm not going to bother looking for it. So now I go back all the way down to my 500 volume chart. And again, I'll kind of review what I just discovered with this. Okay. Come on. There we go. Before that trade opportunity. Appears acting weird. All right. So basically what has happened is, come on now. Cancel. There we go. I wanted to write it right on the chart here. Basically, what I'm saying is, program's lagging today. That's okay. There we go. Oh, come on. What a type. Anyway, while I'm waiting here, I'll just show you real quick as well. I think $sign. What is it called? SPINX. Oh, I don't have the data for it. That's the symbol for the visual S&P difference between the futures and the index, the fair value. You used to be able to, well, I used to be able to chart it. I can't anymore, obviously, because I don't pay for that data feed. Oh, well. So getting back to this, let's see if it's going to let me draw anything yet. Hey, what is going on today, Brandon? Here we go. Maybe. There it goes. So basically what we found was on my 2,500 volume, which was my trend time frame chart, we saw that we were sideways, possibly bearish, right? On the 12,500, which is our perspective time frame, okay, what we saw there was that we were bearish and no demand nearby. Because if there was demand nearby, we might be able to stop that downward move and we wouldn't want to short. Then on our smaller time frame, the 500 volume, which again is our zone time frame, we found a supply zone to short and demand to target. Now, if we had been in an uptrend, the supply would be to target and the demand would be to short. Does that make sense now to everybody? That's all we did. So unfortunately, I deleted my lines here. The 500 volume, I had this little supply zone right here. And stop it. There. So we go forward and prices move into the zone right there. Bingo. Now we go short. That's the entry. Entry happens at 12:41 p.m. Our target, remember, I do have a target down below right there. I want to get out before that demand zone. So maybe 44.76, and let's see how long it took to get there. Bingo, just hit it right there. So we got in, what did I say, 12:41. We're out by 12:47, 6 minutes. Not bad, right? And we're looking at what, over 20 points in the S&P? A lot of volatility right now. And that's it. That's scalping. Yeah, it would have been a great trade. So we can go take a look at where we are now. But anyway, that was a trade opportunity. Entering at supply, exiting at the demand, just like we would anything else. We had the trend in our favor, and we had the overall field of play in our direction. Retire off those kind of trades. Yeah, that's the key, right? Exactly, Stephen. So looking for the right opportunities. And we do this when the markets typically are a bit choppy. If I can't really discern a better direction on the higher time frames, I'll actually do scalping in the E-mini think tank. So like I said, if you want to learn more about the scalping, I'm still not done yet. We've got some time left. But if you want to learn more about this, I would like you to go ahead and click on the link that Clarissa put up. And basically, you can join us in the E-mini think tank. If I can find it, there it is. And what will happen is you'll be able to join us on the bonus videos. You'll see there is, where is it here? Scalping volume trading right there. So there's a section that pretty much is recording of everything I just did. But it's about, I think, 2 hours long, maybe an hour, hour and a half. And in addition to that, there's some charting, documentation to help you with it as well. I think it's on this one right here, charting styles. Okay. So again, those numbers are letters right here: perspective time frame, trend time frame, zone time frame. So, well, thank you. Tweets I put out on the trade room scalp trades have been very impressive. Thank you. Yeah. So the perspective time frame, we're just figuring out what's called the field of play, basically where prices are likely to move during our trading session. The trend time frame, we're trying to figure out the best direction to profit in. I was doing some work with a student of mine this morning. He contacted me for some help, and he was trying to create this or do the strategy he has automated, and he took a big loss and wiped out all of his winners. And I found the reason why he did that was he was ignoring the trend and trying to play the strategy counter trend. And it doesn't work that well. It only works when you're trading with the dominant trend. So I showed him how to fix that by looking at the dominant trend. Again, you just take that zone time frame, multiplied by 4, 5, or 6, and that tells you, okay, where do I need to look for the trend? And then before I go any further, I also need to look at the perspective time frame to let me know where that trend is likely to end, because you don't want to jump in at the end of the trend, but you might want to catch the reversal because you can get big moves that way. So when going back to scalping now, I'm going to clean up this chart. Oops, wrong page, wrong tool, right here. Drawing, delete. We're going to go to the current price. There we are. Now, before I do any trades, I go ahead and I'm going to change this from the 500 volume to the 2500 volume. Maybe. And the reason why, again, I just want to make sure the trend is still down, and here it is: lower highs, lower lows. We're in a downtrend, so we should be focusing on nothing but shorts right now. Now, before I say that completely, I also want to go to the 12,500 volume just to see where this downtrend is likely to end, because I don't want to jump in at the end of the trend. So here's my line where we currently are. I look left and down. Why it's jumping so much on me. There we go. And you can see that this is not a zone, but there is a lot of buying pressure that comes up here. So I may have to be careful of that, but it's not technically a zone. These are all leg candles. They close outside the previous candle's range. So going back further, you can see that there's my zone just a little below that. Right there. Drop, base, base, rally, broke to a new high. Okay. Quick question about the SPX trade, because you also use the theory for RTY. You're talking about the index ARB? Yes. Yeah, fair value is the same on all of these, but I don't have the index ARB number for the Russell. I only have for the S&P, NASDAQ, and Dow. So if you can get it, then yeah, absolutely you could use it. They all work the same way. I was very fortunate back in 2008. I was in New York City and I was having dinner with the CEOs of each of the major exchanges. So at the time, it was the NYSE was Duncan Neurauer, Bob Greenfield was the NASDAQ, and I forget the gentleman's name for the BATS exchange. But each night, there were 3 nights, we had dinners, and it was me and a bunch of hedge fund traders. So we got to, pick their brains. And basically, Duncan had said that when it comes to this program trading, back in 2008, that constituted somewhere in the neighborhood of 70 to 80% of the volume on the NYSE. So this is no joke. This is major stuff. And you can see that often there's a symbol for it you can look at in different platforms. So that way you can tell when you're in line or if you're going out of the range, and these buy and sell programs will kick in. And it really does move the markets. So it gives you scalping opportunities. So anyway, we can see on the big time frame, there's the bottom of the trend, 44.52. So if we keep moving, we're likely to keep dragging down to that area. We saw on the 2500 volume, we had a downtrend. Therefore, now I go to my 500 volume and I should be looking for short scalps. That's it. So now I've got to find my zone to go short. Put in a horizontal line, and I'm simply going to look for supply. That's all I do. And starting at current price, looking left and up. I mean, that's a pretty good drop right there. So maybe we got a zone here. Well, I've got a base, 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 leg. That doesn't work. So I keep going back. Let's see. Might work, but it's not great. Nope, doesn't work. Okay, so again, I've got a leg candle here, but this will not qualify either. And the reason why is that's not a good leg out. So I just keep going back. Leg, base, leg. This might work. We have leg out. I have leg in. Wrong one. Right there. So that might be my zone. Right there. Okay. So I remove my guidelines. Just let me see what I'm trading here. And we may not be able to get this trade because we're pretty far away. Right. So I might just have to wait for new zones to form. And that's it. You just got to be patient. Delete. Come on. Delete. So that's my supply zone for entry. My target for my demand, as you can see, we're pretty far away. Oh, we have a new zone possibly forming here. We'll have to wait and see. So again, if I'm looking for my target, and I do have a new zone. What's the average time to get it? It varies. It's individual. I don't know. Right here we have drop, base, drop that just formed. We also have rally, base, drop just above it. So I'd probably look at both of these zones. That was even easier. Yep. I combine the two. I have no idea what your normal time would be to get it. Honestly, you just got to be willing to put in a little bit of effort and follow me. And again, if you can follow me, I actually walk you through the trades as I take them. And you should be able to, in your demo account, just do the same thing. Take the trades as I'm taking them, and then you should be able to get similar results. So let me see, going back here, trying to find a good target for my scalp. No, we've already been to this area. It's going to go back here. Oh, there we go. We've got rally, base, rally. And another rally, base, rally right there. Rally, base, rally. So now I've got a trade opportunity, potentially. Yep. Let's go to current price. And now I have to wait to see if I can get in. That's it. So my entry, let me just edit this. I'm going to combine the two zones. There's my entry. I have rally, base, drop, base, drop. So I'm going to look to short if prices come back to 72.75 with my stop loss above. Usually give it 2 or 3 ticks right there. So that's $100 of risk. And my target, I'm going to get out before demand. We may end up touching this demand before we go back up, so that may not happen. There's target 1, here's target 2. As you can see, target 1, 250 with $100 of risk. Target 2. And now I just do this. Show my order bar, click to sell, 75 with the limit order, stop and target, looking to risk $100, looking to make 250 and submit. And then target 2, and it may not happen. I don't know. Either it'll happen or it won't, right? I can't force anything. So my second target still same for the stop, but the second target is 462.50. And that's it. And you just kind of get good at your platform. So one of 3 things will happen. Either nothing will happen, or we'll get to my zone and I get in and I lose money, or I'll get into my zone and I'll make money. I have no idea which. And that's all I can do. You know, we kind of had another, no, it wasn't really a zone here. Now there's no other zone. That's the only one that I have. We are reacting to a little bit of selling pressure here, but there's not a good zone. So I wouldn't have taken anything else. But that's scalping. The only thing that's different than what I normally do is the type of chart that I'm using. So instead of using a time-based chart, what I have done is I am using my scalping charts with tick charts or share bar charts. I prefer the share bar volume charts because really what you're looking at here, every candle has the same amount of volume. However, every now and then you're going to see a candle that really stands out because it has a much larger range than the other candles around it. We don't really have too many right here. But when you have a large candle that has, did I get in? It didn't let me in. It hit the zone though. When you have a large candle with the same volume as everything else, it shows you an imbalance where there was a lot of pressure on one side, but nobody opposing it. Okay, does that make sense? If you get a large red candle, for instance, you had a lot of selling pressure, but nobody willing to buy. So the sellers had to drop their prices aggressively to meet the buyers, to get them to buy their shares. Or vice versa, you get a large green candle, you had lots of buying pressure, but you had nobody willing to sell. So I'm getting in now. And this scalp may not work. It's not the strongest of zones. But, you know, I'm trying it out and we'll see. Like I said, the small loss I can easily overcome if it doesn't work. So it's starting to work. And I don't do anything until I get halfway to my first target anyway. So I could put an alert or just put in a line if I'm watching it at roughly halfway to the first target. So if I'm looking at, here we are, my entry, 4472.75 minus the first target, 4467.75. We got 5 points divided by 2. It's 2.5, and we add that to the entry, or sorry, the target, 4467.75, 4470 and a quarter, which is exactly where I drew the line. That's the halfway point. That's when I move my stop, but it looks like I might get stopped out ahead of time anyway. So we'll see. This is not a very strong zone. There it is. Does this platform require to select submit orders instead of automatically entering when it hits price? Yeah, I can turn that off. It's verifying my orders, but I should be able to turn that off. So anyway, this one didn't work. And I said it wasn't the strongest of zones. I mean, you look at the zone, it wasn't giant red candles either. So that's not a problem. Start fresh. Look for another new zone or not. You know, look for something else to trade. And perhaps the trend's changing. We just broke a supply zone. We shouldn't be breaking supply if we're still in a strong downtrend, or maybe we're using the upper zone up here. We have another zone we're coming to. So lots of things I could do here, but that's what I would do is start fresh again. And there we are moving into that area. But before I pull the trigger, I'd want to see 2,500 volume. Are we still in a downtrend, or do we breach that trend? And you can see we made a higher high. So we're not really in a downtrend anymore because we broke this high So that's going to give us weakness if we're trying to short. This is going to keep rallying. Now we're not in an uptrend. Notice it broke the zone. That's all that was going to happen. So now if we can make a higher low, I'll actually start looking for longs, perhaps. But that's it. That's scalping. So if you got any more questions, let me know. You can go ahead and join me in the E-mini think tank and learn a lot more about this and how we do this on a regular basis. If I go back into, say, a 15-minute time frame, you can see that so far the prices have really been kind of going sideways. We did bounce off a 15-minute demand zone, but that's all we've really done right here. We're taking a second whack at it with a positive divergence. So there's not a whole lot going on in the equity markets, but when you get into scalping, that may give you more opportunities to trade. Remember, with more opportunities, though, more frequency of trades, you have more risk. So you really need to be selective. And I probably shouldn't have taken that short because it was not a great trading opportunity. That's all. But we go over all these things with the rules, and I have things written out for you with those rules as well if you join the E-mini think tank. So you can try it out for 2 weeks for free, by the way. If you click on the link, Clary's put out that link again. If you go to that link and you do the 2 week, if you do the quarterly subscription, you'll see there's two different subscriptions. There's monthly and there's quarterly. If you do the quarterly, the first 2 weeks are free. You could try us out and just practice as much as you want. You get access to all the videos, you get access to all the documents, and you get access to the live sessions for free for 2 weeks. Before this 2 weeks is up, if you decide this is not for you, you just let us know. We don't even charge your card for the first 2 weeks. Once the 2 weeks is up, then we'll charge your card and you're in the program. So that's kind of cool. You get to try everything out, kick the tires if you want to, without having any kind of commitment whatsoever. So hopefully you decide to do that. If you got any questions, I'll stick around for about a minute or two, and then I'm going to make some lunch for myself and my wife. So thank you for being here. Appreciate your time, and hopefully you got something out of this, and I'll see you in the evening think tank.